Hi everyone, Rachel Thompson here, the Smarter Mortgage Lady, doing my monthly summary for February. So, what has been happening over the past month with clients that I've been working with? So, there's been some changes to the loan to value rules, or LVR, by the Reserve Bank, and there seems to be a lot of confusion from people in terms of what that means. And so the real key factor in this is how much deposit do you now require and what is the maximum loan that you can have on a property. And the conversation around that is it can be really confusing if I just talk about the percentages. And so therefore, if you're in the market to potentially buy an investment property, I'd love to have a chat with you about the changes that the Reserve Bank has made and therefore what that has meant for lenders with regards to their restrictions or their policies. There are potentially some exemptions with regards to new builds. So, whereas there may be restrictions for the maximum loan amount that you're able to borrow for an investment property, when it's a new build, there's a number of lenders who are able to basically work around the Reserve Bank rules, or there are actually exemptions available for people in that position. So, again, if you're looking to potentially buy a new build as an investment or a residence, then have a chat to me and let's have a look at the policies for your lender or maybe a new lender that might be suitable for you. Tips and tricks from the Smarter Mortgage Lady. I have been talking about this now over and over for the past year, but getting a pre approval for a written formal letter of offer for what you can actually borrow before you actually go shopping. Firstly, that saves you time and money because then you're positioned ready to go shopping, knowing what your number is and what finance you can have. When it comes to the property, there may be restrictions for the purchase price depending on where the lender sees that property is placed in the market. So, for example, you may have a pre-approval for 850,000, but potentially a lender may only allow you to spend around 780 or 800,000 on that property. So, the number that you can be pre-approved for your financial situation could be quite different than what you might be approved for a specific property based on the market and where that property is. There's some changes that are coming next week, and I know the monthly summary is generally looking back, but there's been a lot of preparation not only over the last month but over the last year for this financial services industry and even beyond that. People like myself who are wanting to remain in this industry need to be certified. We need to be doing or have done some study like I have. So I am a level 5 certified residential lending advisor, which is mortgages, and I'm also a certified life and health advisor. So, what I'm now able to do is help my clients with their life and health insurance or their risk plan as well as their mortgages. So, that's super exciting. And what it means for customers is basically you're going to get quality advice from advisors now that has become a profession where they're forming a real benchmark for people to get certified and do some study, and you're going to see higher levels of disclosure and hopefully a continuing level of financial advice that you've enjoyed from 99% of the advisors that you've been dealing with. But I'm excited about what that means for our customers and the level of advice that they're going to get. So there's some really important things that I've mentioned again over the past year, but even in the last month, it's come up as being a highlight, something to highlight again. So there are a couple of things that can really affect people borrowing or being able to get a pre-approval. And one of those things is short-term debt, having vehicle finance, having credit card limits, or so those kind of things, it can affect your ability on your income to service that short-term debt as well as be able to get a mortgage. So it's important to run through the numbers with somebody, which is something that I do with no obligation. Run the numbers, see what your financial position is like, and whether what you're trying to do is possible. And that's something I'd love to have a look at for you if you're thinking about maybe buying a property. The other thing is savings. So, what KiwiSaver seems to have done for a lot of people is it's represented an opportunity with the early withdrawal to put together a deposit as a foundation for buying a home. And it's been an enforced savings scheme for people. And I'm working with a number of first home buyers who are withdrawing their KiwiSaver. I'm not qualified to tell people whether they can, whether they should, and how much they can withdraw. I leave that up to KiwiSaver providers for my clients. But I can tell you that a number of clients are actually using their KiwiSaver for first home withdrawal or second chance, where they may have been in a relationship and they've separated and they're starting again. And the only place that can actually tell you whether you can use a second chance or have a second chance use of your KiwiSaver is Kainga Order, which is the new name for the division that used to be Housing New Zealand. So there's a few things to look at and consider. Just in terms of whether you're ready to buy a home. Sometimes it's about running the numbers, and that comes down to, in summary, how much debt you might have, how much deposit you have, and where that's coming from. Generally, it's 5% from genuine savings, which can be KiwiSaver. And then what's your income and what's your financial position? What do you own? What do you owe? And what is it that you're looking to try and do? With the low interest rates around in the market, a number of people are wondering now whether they can actually buy their own place to call home. And if you're in that position where you're wondering and you'd like someone to give you some advice and run the numbers, I'd love to do that. So that's Rachael Thompson, the Smarter Mortgage Lady from ILG.